In Money Watch, the American job market roared back this year after the devastation caused by the pandemic in 2020. Weekly unemployment claims have fallen back to pre-pandemic levels. New Labor Department numbers out today show about 198,000 new jobless claims were filed last week. The 4-week moving average has fallen to a level not seen since October of 1969. To break this all down for us, we're joined by Stacy. She's the Director of Portfolio Strategy at Optimal Capital. Stacy, thanks for being with us. So what do these latest jobs numbers tell us about where the economy stands at the end of 2021?
Well, we're in a unique position because while we definitely have lowered claims and we've reached that pre-pandemic level, the thing that hasn't yet recovered is the labor participation. So there are fewer people out there looking for jobs. There are fewer people out there accepting benefits. And there's been, a lot of people who have quit and a lot of people who have retired. So that's a big adjustment. And that's kind of the anomaly after COVID.
France's unemployment is hovering at pre-pandemic levels now, and there's been that's at a 60-year low. Wages are up and inflation is at its highest point in over 6 decades. Is our economy in a good place heading into 2022?
Our economy is in a good place because we expect to have higher growth rates than normal for an extended period of time. We also expect inflation to ameliorate with, supply chain issues. We expect demand to kind of drop a little bit. We expect things to kind of normalize. What happened during the pandemic is you had a lowering of GDP output because there were lockdowns, and then you responded to the pandemic with record amounts of fiscal and monetary stimulus. So that was a record amount of money being put into the system. And so the inflation is the exacerbation between the money available in the system and the goods. And so those prices are going to go up. Those forces are going to change coming into the new year because fiscal spending, even if we get Build Back Better, is less money coming in at a much slower rate. And of course, the Federal Reserve is starting its tapering process and is projected to raise rates next year, which is all going to reduce the money supply and change those catalysts around the anomalies of COVID.
So, Frances, how do you see this great resignation factoring into the economy next year? We know that as people make their New Year's resolutions, they're assessing their attitudes toward work, and many people have dropped out of their jobs, said that they want to make a change.
Yes. So I think, a lot of us were, myself included, probably to some degree, a lot of us were on autopilot before the pandemic. We were just run, go, 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 go. And I think the pandemic and the stay at home kind of gave us a chance to reassess. I know for me personally, I used to go into the studio all the time and I couldn't imagine life without the studio. When I first started doing, Skype appearances on television, I hated the fact that I didn't have the makeup and hair and all of it. And now I almost prefer, now that I've got it all dialed in and I've reorganized my life, I almost prefer the fact that I can actually come to you on national television from my living room. And so I can't imagine going back to the studio every day. And so that's happening across the board. People who have spent more time with their kids, people who have adopted pets. And it's going to be very challenging for companies out of the pandemic. How do they balance this new sort of work from home kind of ideology that's developed over the pandemic? And that, I think, that with a tight labor force, with wages going up, has all contributed to people sort of rethinking where and how they work.
Well, Frances, we want you to have balance, but please do come back to the studio sometime, okay?
Yeah. Okay. I'll take you up on that.
Good. I want to ask you a little bit more, though, about some wage increases in different industries this year. Do you think that companies are going to have to continue to pay at this elevated rate that employees can demand, or are wages going to come back down as the markets level off?
So wages are going to come back down, and there's such a different sentiment between market participants, those of us who invest, and what's happening with the consumer. So from the market viewpoint, we see actually a peak in inflation, which means it's going to start going higher at a slower rate. Now, that still means that on the consumer side of things, that the prices are going to be moving up, but they're going to be moving up at a slower rate. What does that mean? Okay, markets are going to price that in, just like we priced in the reopening upon the vaccine announcement on November 9th of 2020, and the markets got ahead of that, even though we weren't anywhere close to being vaccinated or reopened. Markets are going to get ahead of the fact that growth and inflation are set to peak in 2021. And when that stock market starts selling off, and the unemployment benefits go away and people have a little less money to throw around in the system, I do think that the labor market's going to be less competitive and those wage pressures are going to go down.
Francis, as we count down to the new year here, what are your biggest concerns for the start of 2022, and what concerns are on the minds of your colleagues and clients?
So my biggest concern, the thing that can really, is we've had this buy the dip mentality. Obviously, the S&P 500 is up 28%. So the thing that can unravel that the fastest is if we have credit concerns, meaning that people cannot meet debt obligations. So we have a record amount of debt in the system, both publicly and privately. And if somebody can't service that debt and you start to see a wave of defaults, now that could happen a couple of different ways. People, the stock market could go down. People could have less to spend. Also, lowering the fiscal and monetary spending is going to, in aggregate, put less money in circulation available for that debt service. Raising interest rates can make debt service harder to service. So debt harder to service. So anyway, any of that would happen where we see kind of like a wave of defaults starting that looks anything like the financial crisis, that could turn market and economic sentiment on a dime. So that's what I'm watching for.
Well, Francis, we wish you a very happy new year. Thank you for joining us today from Tampa to break it all down for us, and we'll look ahead, see what happens. We only know that change is ahead, right?
Yes. Happy New Year.
Thank you.